Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 6, 2022. Hope you're all doing well. In today's segment, we'll take a look at the market and see how to trade option like a pro. So with that, let's jump in and get started. Look from a market perspective, we got S&P 500 index going well of late, but look, we got two big down days here, mainly because job market is heating up and Fed might be increasing the rates. Folks are worried about inflation and probably recession fears. And look, same story on the Dow Jones Industrial Average. We got nice run. Look, last 2 days of pullback here. And same story in Nasdaq, slightly weaker, but two good pullback days here. And look, Russell is down big time, and bonds are holding up pretty well, as you can see here. And VIX is, basically getting its groove back, as you can see here. And crude oil is down big time. All these big energy companies, now they're coming down. There is uncertainty in the oil patch. Gold is still high, but look, 2 down days or 3 down days here, and dollar is weakening. That's a good news here. So with that, now let's jump into one of my favorite platform when it comes to trading options, or even for stock for that matter. It's a bar chart. As many of you know here, I got bar chart premium. I love bar chart premium. It's a very low price. It's around $200 per year. It's a very small price, but it's a very powerful options screener. I love this option screener. To begin with, what we'll do is we'll look at ETF screener. I'm already in ETF screener. I will walk through my filter conditions so that way you can look through. If you have bar chart, you can play and follow the same methodology here. So with that, typically I go into my filters column here. Look in my filters, nothing fancy here. Basically I gave a name here. It's the ETF. Open interest more than 100k. When you're trading options, you got to pay attention to open interest. Don't play options where open interest is very low. It's not worth your while. And look, from a filter perspective, I basically have few things here. I have basically I chose only the long here. When I play options, I don't want to go with the double, triple, and all those things. It's very good to keep it simple and go with the nice, long strategy versus all the leverage, which is always very, very, very volatile. Keep it simple, keep it conservative. And look, from a filter perspective, very simple filter. I got here open interest. I want this to be more than 100,000. When we talk about open interest, it's basically the options contract held by traders. Basically, it's held. It's not a daily volume. It's total options open interest. Basically, options contract held as of now. And we got here last price. I want to make sure when I trade some of these options, I want the ETF price to be more than $20. So I know these are stable ETF. And I got here 1 month average volume. This is the 1 month average volume for the stock. I want this to be more than at least 1 million, as you can see here. Very simple criteria, nothing fancy. The most important one is really daily options open interest. Look, you cannot have this filter in other trading platforms like Finviz or even TradingView for that matter. Bar chart will give you option scanner. Basically, we are looking at overall scanning at the underlying level. So with that, let's jump in and get started. Look, it's a very simple scanner, and look, I can create my own custom views. Right now I got my own custom view where I selected few columns that are very important for me. And what I've done is really, I got the important symbols here. I need a symbol, the name, last price, change, the standard things here. Then I got performance. It's very important for me to look at the performance. I got performance all the way from 1 day, 5 day, 20 day, all the way to 2 years. As you can see here, I like to see the performance because price action is very important when you trade options. And then you got volume here. This is today's volume. And most importantly, look, you don't get the IV rank and IV percentile in any of the tools like FinViz or even TradingView for that matter. Bar chart gives it to you. It's got both stock related criteria and options related criteria. That's one of the reasons I love bar chart, because it combines both stock trading and options trading and puts it in a neat package for you. And with this bar chart, you'll get it for a low price, which is just $200 per year, which is a very, very, very good price here. And then you got few more things here. We got market cap, which is the capitalization or the net asset value of this ETF right now. And we got a relative strength here. We got 14-day and 5-day. I love to use these two because it tells me in the 14-day how is it, and in the 5 days it's getting weaker. Right now, look, S&P 500 is getting pummeled here. Look, 5-day is 33, 14-day is 50. Stock market has been humming along pretty well since October, and look, now we're in a little bit downturn here with the 5-day RSI around 33. And very important here, look, you don't find these things in any of TradingView or FinViz. We got here total, we got options volume, total open interest. Options volume is a volume that is traded today. Open interest is total open interest in the contract which is held so far. Then we got call volume and put volume and put call volume ratio. Look, right now it's telling you today put call volume ratio perspective, we are trading high put. That tells you folks are worried. They're probably buying put options or selling put options. Some of the daredevils like myself, we love selling put options. And look, we got open interest here, call of open interest and put up open interest. And look, total open interest, put call open interest ratio. This is again a conservative ratio here. We got 1.59, tilting more toward the put here. Puts are transacted more and held more in the investors traders accounts. This is the quick layout here. And then look, these are the top things. I don't go down the food chain too much. I just look at the top few names here. SPY is my favorite. I always trade SPY when the stock market tanks big time. I'm always there to sell some put spreads way below and make some money. And I also sell some call spreads which way on the top. I will show that in a minute here. And then I got QQQ. I also play this QQQ when it's a down for consecutive a day or at least 2 days. Tomorrow I'll be selling some put spreads on this one also, and also call spreads at the top here. And IWM is also my favorite. I'll be doing the same thing here. Next, look, even though bigger market is tumbling, look what's happening to China here. China is going along pretty well here. FXI is going higher, as you can see here. This is also a good one here. You can also look at the IV rank. Look at the IV rank here. We got high IV rank in top 2 here. Russell is slightly lower IV rank. That's why high IV rank is good for selling put spreads here. And we got even China is pretty good. It's going higher, but look, IV rank is high. We could sell some put options. This is a very low price. You can easily sell put options underneath the current stock price. And we got few more here. We got KWeb again, Chinese an ETF here. Look, it's also doing pretty well. High IV rank. You could sell some put options here also. So these are my favorite things here. When the when the IV rank is low, for example IWM here, I'll be leveraging strategy like buying call options. Look, IV rank is low, and as you look through here, RSI is also relatively low here. I would be basically buying call options in IWM, mainly because IV rank is low and volatility is relatively low here, and volatility is low, and RSI is also low. I will be buying some call options here, 60 days plus. And we got few more here. I will not talk about all of them in detail, but look, we got silver here. Silver seems to be humming along pretty well here. It's a bullish trend in silver as of now. So with that, let's jump in here to my favorite trading platform, which is thinkorswim. So I just go into thinkorswim here. I can change this to a smaller one grid view here. And first, to begin with here, we can go into SPY. Look, SPY here, we got nice chart, as you can see here. SPY, as you see here, last 2 days is coming down. So this is where you can look at some opportunity here. All right, look, two big red candles here. So at this time we can do something, some trading strategy here. Look, from a DMI perspective, we got a blue line coming down, tells you it's bearish. And we got here check in money flow. Money is flowing into it, so smart money is buying now. And look, implied volatility is going higher, and historic volatility is coming down. That tells you volatility is increasing right now. This is the time to sell premium and make some money here. And I will go with the, I would love to go with 45 days, because you should not go beyond 45 days when you are selling premium here. So typically what I do is I go all the way here and look at the delta. Delta is the hard blood here. You always need to, when you're selling put options, go around delta 10 here. Look, we got delta 10 right here. Look at the juicy premium here. We got a nice and juicy premium around $1.88 here. In the past I used to sell naked put, but these days I stopped selling naked put, mainly because it's not worth your while, because market is so jittery. You will end up getting a margin call if the market tanks. That's why these days I just sell put spreads. Keep it simple. Keep making money because of theta decay. So what I would do is look, current ETF price right now is 393, and look, you can go around delta 10 right here. And we got delta 10 right here, 352, as you can see here. And look, it's a pretty healthy volume here. Normally what happens is, around the round price, that's where the volume is higher. Look, we got round price 350 here. Look at the open interest here. Very nice open interest. I would really go to this 350 here, and I would probably sell a spread. Look, you can go right here, 350, and go to sell, and we'll be selling a spread here. So if your account size is a little smaller, just go with the $5 wide spread, no big deal here. You're selling a 350 here, you can buy back 345, just a $5 wide spread, nothing fancy here. But you're basically working for a theta decay here, which is a good deal. If your account size is a little bigger, you could go with the $10 wide spread. You collect a little more money. Look, we can do 330 and 350, 340, $10 wide spread, as you can see here. This is my favorite strategy in the ETF here. You collect about 59 cents. I typically look at the mid price and basically collect $59 here. So this is a good strategy. You could go confirm and sell it. As you do this, you could also do one more thing. You could also, as you confirm and send here, you are basically it's a $10 wide spread. You don't incur too much expense here, because it's just a $10 wide spread. Maximum you could lose is really $1,000 minus the credit that you collected, which is $59. It's a very simple strategy. And what you could also do is, in addition to selling a put option all the way top, you could also sell a call option in parallel, and you could go all the way down here. And you could go into call option here, and before you go to call option here, you could also analyze this trade. For the folks who want to analyze trade, you could go into this platform here. You can just say analyze trade, and look, it'll open up this big thing here. And one thing you got to do is, if you have something else going on here in the platform, just check them off here, so that way you don't see all these details here. Look, I got multiple things going on here. I'm analyzing. I can just check them off, so I can just look at the ones that I'm really interested in. And look, we got a bunch of things. Look, this is just my vertical here. So as you can see here, this is my vertical, and I'm selling 350 and I'm buying back 340, 59 cents credit. And we could also set the slice here. We could set the slice here to break even, and we could change the date to, I think we are looking at 12/21 here. Oops, break even 12/21. There you go. Look, we got our chart here, and we got break even right here, as you can see here. And looks like we have a very good chance of making money here. Got a nice 98.25. It says we are not spending too much money here. You could go with such strategy. It's a probability of making money is very high. At the same time, you're not putting too much money at risk, so it's a good strategy here. And in the meantime, what you could do is, this is one strategy here, selling put option all the way below here. For this put option to lose money, ETF has to come down from 393 all the way to 350. So that's a long shot. Can happen, but it's a very long shot here. Probability is very low. In the meantime, you could also go into the call side here, and you could go to delta 10. Look, we got right here at delta 10, which is 428. You could select call spread right here and collect some money here. Look, you got doing vertical, and we are doing let's see here, 428. Look at 428. We got very little bit lower lower open interest. That's okay. And we could go in and do $5 wide here instead of 30. I would say 33, and go from there. Look, we got 33 here. This is not traded, and we can go to 34 right there. All right, so we are collecting 45 cents here. We are selling a call spread. This is a very good strategy. You can just keep doing this all day long on ETFs like SPY, QQQ, and so on and so forth. As volatility comes down, you kind of keep the money in your pocket. Very easy strategy. Don't need to sweat too much. So this is a strategy for ETFs. You could do it all day long. And you could also, when the volatility is low, for example, IWM, I'll be slowly buying some call options here, so that way, I make money as IWM goes higher. And I would do the same thing on the stocks. For example, if I go to my stock option screener here, I can go to stock and go to stock screener here. Keep it simple here. And look, I got same things going on here. I basically go into few things here. I might go into stock, most active as example, or typically my strategies look at option volume. I want the volume, to be underlying volume to be more than $2 million. I select that, and look, I got few things going on here. And look, I got one more thing here. I got multiple screeners going on here. Look, typically I look at one of these screeners. So here what I do is I go here and say option open interest more than, instead of 100, I would basically say 100,000 here. So I look at very liquid options here. All right, so let's go here. Liquidity is king when it comes to trading options. That's why you got to make sure the options open interest is very high, and the volume I kept it simple, more than 100. I don't want to look at the options which are not at all traded today. So with that, let's jump here, go to search results. All right, I'll remove this here, and from a view perspective, I got a stock screener view here. I go here and look, we got here our stocks. So what I would do is here I would go here and search, basically sort this by total open interest in a descending order. I want the high open interest stocks at the top, so that way I can make some good money. Look, top of the list here, none other than Tesla, one of my favorite stock here. And I got few criteria or few columns here. Today also Tesla came down, as you can see here. Last 5 day, 10 day, 20 day, 1 month, it's down all along. Even 2 year Tesla is down, as you can see here. So when the stock is going down like this here, my favorite strategy is to keep selling call spreads way above the current stock price, around delta 10 or so, and keep collecting the premiums, especially because look, IV rank is relatively high, implied volatility is relatively high, not too high. You could adopt this strategy here. Tesla, since it is coming down, I'll be a little careful. I will not be selling put spread here underneath stock price. Little bit risky strategy. Look, it's coming down big time. Instead, go on the call side and sell some call spread around delta 10. Make some money that way. And we got Amazon.com here. This is a big gorilla, as many of you know here. This is also going down. And look at there is no, it's all red all along. So I would do the same thing here. Look, IV is relatively high. Sell delta 10 call spread at the top here and make some money here. And then got Apple. I love Apple. Apple has been doing very well. Look, despite of market coming down, Apple is good on a 5 day, 20 day, and even 1 month it's positive. With stock like Apple here, with the IV rank is relatively high, you could adopt the strategy of selling put spread underneath the stock price here, delta 10 or delta 15, and make some money with Apple here because it's pretty strong. And you could also buy some call options here, as Apple is down, as you can see here. IV percentile is slightly high. I would that's why I would not buy call options. Instead you could buy call spread, because by doing the call spread, you're actually you don't have too much exposure to volatility, so you could do that instead of call option itself. But I love to sell put spread underneath the stock price and make some money that way. Then you got Ford, which is very cheap, as you can see here. Stock is getting pummeled, as you can see here, showing some strength in 50 day. And look at the volatility here. Look at the volatility, very, very, very low here. So for stocks like Ford here, my strategy is either buy the stock and sock away because it's a very low stock price, or you could even buy long-term call options, maybe 1 year out, and buy some long-term call options, say delta 70 or so, and sock it away. That's also a good idea, mainly because look at the volatility is very cheap. You're not losing money to implied volatility. From here, implied volatility can go higher and you can make some money, and stock can also go higher. It's down big time. And follow same methodology here. We got Google, one of my favorite stock here. Google is also showing some strength, as you can see here. So the moment you see strength here, then next thing we got to do is look at the IV rank here, slightly higher. So you could sell some put options underneath, and it's not too high. You could also buy some call spread, and at the top you could also sell some call spread. At the top you could sell some call spread, and make some money that way. For stock like Google, I would be selling put spread below the stock price, delta 10, and selling call spread all the way at the top again, delta 10. And you could buy in out spread, buy basically a call spread in out, slightly below. For example, price is 96, you could do say 90-100 spread, or you can even do say 95-100 spread. So that's also good here. You could do such things when you see some strength in stocks like Google. So with that, we'll end here. Thank you very much. Happy investing and trading. Please subscribe.